Hey guys, Jarek here with Bull Stocks, just giving you a quick update on AMC and how the apes are doing. Guys, Hedgie is really trying some fun things, but you know what? I've been watching some YouTube with some of the guys that are following the AMC movement, and they've got some great things to say, man. So this right here is Tom Zuzzolo. He's a pretty cool dude. Here you go. So I'm going to play a quick little clip. We're not going to listen to the whole thing, but he's got some good stuff to say. This right here, this guy is a hedge fund expert. So let's listen to what they have to say real quick.
Question though, right? AMC hitting $100,000 market cap. What was it again? That'd be about $500 trillion market cap.
About 50 trillion, yeah.
50 trillion,
50
which is just insane. So we're in crazy land here. But hey, actually, with what you're saying and I just listening to your show on the amount of synthetic stock that could be created and could be out there right now. If we are holding the bag on AMC, it's not impossible. And even a $10,000 per share price would be crazy, right? From what it is today. Now, I think the example that, I don't know, makes a lot of sense for me is what happens with Archegos Capital Group. So Archegos was ran by Bill Huang. If you guys saw this in the news a couple months ago, Bill Huang, he just runs his family office. So he just runs an office. He was a former guy that worked for a hedge fund. They run $20 billion they manage. And what happened was they took a long position in Viacom. The stock hiccuped, and they took this position through prime brokers. Now, this comes back to Citadel and what's going on with them, with GameStop and with AMC, and what potentially could happen, because we just saw it happen with Bill Huang. So what happened with Bill Huang, Viacom has gone from, like, I got it pulled up right here, $23 a share a year ago to it was $96 a share. And a lot of that was from Bill Huang buying and then re-leveraging and buying again. And now typically, you can't do that. You can't leverage a stock to buy the same stock. However, he had 6 different brokerage accounts. And these are at the biggest banks in the world: Deutsche Bank, Credit Suisse, Goldman Sachs, JP Morgan. I mean, these are the largest banks on the planet. And apparently, they didn't know he was doing this. And what happened was the stock hiccuped. He had a margin call, couldn't meet the margin call, and lost $20 billion almost overnight, which is just insane. Wow. I don't know how. Like, the risk management teams on these funds, like, what are they doing?
Dude, that's going to be peanuts compared to what happens to Citadel. We're gonna charge them trillions of dollars out here.
Yep.
Yeah. So, and what happened there? Yes, Bill Huang he loses his capital of, let's call it around 17 to 20 billion. I don't know the exact number. The prime brokers, though, are held with all the leverage as well. Which we look at a Citadel example, and Tom you were just asking me what would happen to Citadel if this happened. Citadel, I don't know how large of a position they're in right now in a short position, but if they've leveraged that position or done naked shorts, I mean, that position is 50 trillion, potentially that large, right? If people don't sell. And what would happen is these prime brokers who are holding the bag and help facilitate the transaction, which I don't know. And just a side note, it's just bonkers to me that a prime broker, a Deutsche Bank, with all their analysts and risk management, would allow that to happen. Like, they're allowing that trade to take place. And with Archegos, Deutsche Bank's a great example. They lost about $6 billion. $6 billion every year. They made about $15 to $20 million doing that transaction, which is just fractional. As a bank, you took a $6 billion risk for $20 million a year. That's it.
Yeah.
Like, where is your risk management team? And so to see that happen 2 months ago in a great market, relatively great economy, think there's not really that much else going on. It's not like it was a domino effect. It makes me a little nervous about what potentially could happen with Citadel.
So, obviously, you said that the money would fall on the brokerage to try to cover that charge. What would happen if the brokerage couldn't cover it? Would the government step in? Would we get walk us through? Let's say hypothetically, we did have a $100,000 share price. Somebody has to buy it. The money is we're having trouble getting the money out here. how would we get the money to the retail investors? Would they even get their money? Should we be worried? Would this destroy the economy? Would this result in another 2008, only worse? Would this change the market as we know it? What exactly how would we get our money?
It's a good question. And again, this is a
So guys, great questions. This guy's he's gonna answer him. He's gonna answer these questions. But I mean, it's pretty amazing if you guys really think about it. All the retail traders that are hodling the apes, the gorilla gang, the moon platoon, guys, we're all working for one thing here, and it's to change our lives. Not just because we're sick of how we're living, because I'm not. I'm happy living the way I'm living, but I'm busting my butt day after day, and I get it. It builds character, as my parents used to say. But guys, AMC is gonna do something amazing here. This guy's gonna explain to you how and what would happen when everything starts breaking down for Hedgie. Let's listen.
assuming naked shorts are going on where they and again, I don't, hopefully they didn't do that just for the sake of the world economy, and maybe not for AMC holders. They're like, great, we'll figure this out. But if they were holding naked shorts, couldn't cover them, the prime broker is supposed to step in and facilitate that transaction. Now if they can't do that and they essentially default on it, you could see an entire bank going insolvent. I mean, if it was that large, we're talking trillions and trillions of dollars, you could see an entire bank or two, depending on how Citadel set up. Now, I don't know how they set up their structure. This is all theoretical, but they could, you could see a bank going down completely, and maybe government stepping in potentially. I mean, it seems like that's what they love to do, is just step in and save everybody. So you could see the U.S., the Fed, coming in to save, not save Citadel, but just to facilitate those transactions to make sure that happened. It's a pretty interesting scenario, and you could see a major crash in a bank if that happened.
Let me ask you one thing.
All right, so we could continue to watch this. We're already 6 minutes and 54 seconds into it, but I do want to get along to some other things here. Let's see. Here is Trey from Trey's Trades, and he's having some fun. This guy's amazing to watch. Well, actually, here, hit this guy up, guys. Listen to his channel. He's got great information on there. Tom Zuzolo. He's got 59,000 subscribers. Good guy. Some of the stuff he puts out there is really good information, very good due diligence. But anyways, hit him up, hit his like button, watch this video if you're interested. But let's go to Trey's Trades. This is Trey Collins. He's Trey's Trades, and he loves AMC. This is one of the forefathers of AMC and the movement of the apes. So let's listen.
And we're going to work with ticker symbol AMC here, obviously. We're going to give you the Ortex update, the short sale volume percentage, Stonko tracker, which shows you the call options that are currently in the money, as well as about how many available shares there are to borrow. Finish it off with the technical analysis. And I kind of want to touch on the different scenarios we had play out here. The more bearish one that have come into fruition, I got to admit, I thought the more bullish one would happen. You get a retest of $63 before it would reject. But hey, we were ready for that, right? We gave a couple different scenarios by the off chance that the bearish one happened, and here we are. So we'll kind of walk through what I expect could happen over the next couple of days, weeks, right? So that you can make your own financial responsibility and decision to, maybe buy some stock or buy some options, whatever you want to do, right? That's up to you. I'm just here to tell you what some freaking random 24-year-old dude in the middle of who knows where thinks about the stock. So without further ado, baby, I got my spoon ready in case that fucking spider.
Oh yeah. So I guess there was a spider attacking Trey. Anyways, funny. Just wanted to just quickly bring your attention. Hey guys, if you haven't yet and you're enjoying this video, please do me a favor, hit the like, hit the follow, subscribe, hit the like button, guys. Hit the bell for notifications of when I do another video. Also, you'll see here, you'll see my TikTok. I post videos on there daily. My Instagram doesn't get very much action, but it's still there. And Facebook, that's our Facebook group, guys. Bull Stocks. That is where it's going to be at. We're going to be pumping the YouTube channel with great information on stocks, on scalping some stocks, making some money. As some of you already know, just going a couple days back here, I had a couple good, $200, $300, $400 days. And, if you need a little side income, a little side money, that's a great way to do it. So anyways, guys, hit the like, hit the follow, subscribe, and share with your friends, guys, because sharing's caring. And now we're going to go back to the video.
Decides to come back. Let's get into the video. So for the second consecutive day, the short interest is up again, 0.65%. You've got currently 71.99 million total shares, current short interest estimate. This is about 85% of the exchange data is what Ortex gives you, and it's reported data. Now, if you want to have your freaking mind blown, go look at the FINRA monthly fines and fees that come out that slap hedge funds on the wrist for malreporting. You'd be freaking amazed, and that's why I really think that this is just an estimate. It's a trend, right? It doesn't tell you the whole picture, gives you a trend. So with that being said, the trend is about 14% short interest of free float is what we got on the stock right now. How many times we gotta teach you this lesson, old man? I never learn. It's just absolutely mind-blowing. Utilization is starting to go back up here as well, 94.28%. You can see that the cost to borrow maximum is staying about the same. So 19% cost to borrow maximum. As that goes up, you can expect more pressure on these short positions, right? In this current moment in time, could we all of a sudden one day wake up and see $100? It's unlikely, right? You're not just going to wake up someday and randomly see $100. You need the setup that slowly winds up, that spring load effect, where we saw in that $14 range that brought us to $77, right? You need that same sort of setup to come to fruition, and we're in the process of that right now. This is the process. It's the spring loading, the consolidation phase, the short interest reloading phase, right? You're watching that come to fruition right now, and this is the second consecutive day that shorts are piling back into their positions to hopefully bring the stock back down. Is that intelligent? No. You gotta watch this. Look up the Kenny G video where he's talking about the computers that trade algorithmically, the high frequency trading based on human emotions. What they can't account for is that's based on bulls and bears, that model. Doesn't account for apes. Doesn't account for people who buy the stock and hold it regardless of what the freaking share price is doing. You can't predict human psychology like that because there's no psychology to predict. It's just buy and hold.
You know what, guys? On that note, it just amazes me because as kids, or 20 somethings, as old as he is, and and Matt Kors, youngsters. Anyways, but we're taught to invest our money into banks, into put it in a savings because you'll get interest. Well, when you invest your money into the stock market, for the past, for like the past 10 years, call it, just go back 10 years, the stock market has been going up. I mean, it just keeps going up. And so, yes, okay, put your money in a stock that's going to last and survive, and you'll be fine. Yeah, sure. But now that we're putting our money into AMC and we're holding, they're telling us to sell. They're telling us to sell. They're saying that it's very bearish, that AMC won't survive. Well, guys, we're making it survive. If you love movies, this is a great opportunity to stand up and fight for what you believe in. I believe in the AMC. I love going to movies. I love taking my son. It's a great opportunity to sit, enjoy a movie, have some popcorn, fill them up with sugar, and just have a good time. So anyways, just went on a quick little rant there. Sorry, guys. Back to the video. It's
you're watching this come to fruition, man. I really do think a lot of these shorts that are being established are not, they just don't even realize what's actually going on here. How could they? How could they? I saw this on Twitter. It said if you knew you were walking the electric chair, you'd probably walk slowly too. And I think that's something pretty interesting to talk about. So short interest looking beautiful, right? Going up again. Stonko tracker, let's just look at this right now. Call options in the money right now, not a huge amount. 82.9 thousand essentially. You can get another 29,000 at that $60 strike, which is a good, 30-35% increase from where we're sitting right now, which would give you a good little boost in gamma squeezing, some hedging that could take place, and push the stock price up over 60 bucks. So with that being said, why is this important? Why should it matter? That means if we get a break over 60 bucks, I would expect that another decently hard push for 61, 62 would come to follow. Now, something important to mention is unhedging. If you haven't seen my video on unhedging, I've got a playlist on my channel. It's the Gamma series. I think it's the third video in there, but the same thing can happen on the downside. So
On that note, guys, trades, you gotta join this channel. If you want to be a part of the AMC movement, then you gotta join his channel. Okay, so, well, you don't actually have to join. It doesn't cost a dime. You just go subscribe to his channel. Trades on YouTube. Fantastic. Great information. Always energetic. Always fun to watch. Back to the video.
If we break back underneath $60, call options run out the money to in the money, and then it breaks back down under 60, right, back to out the money, that can get dumped. It can get unhedged. So a hard move will happen in both directions over that $60 strike price, just based on the high amount of open interest on that $60 strike. 24,000 what you've got on Webull. You've got a slightly different number here on Stonko Tracker, but you get the picture, right? That's going to be a level of resistance, but you're going to see a pretty hard push in either direction when you're approaching that line, and it makes a hard move for the upside or the downside, right?
All right, wait. So here is an update on Stonko Tracker. So as of today, the calls in the money expiring June 25th at $60 are 91,545. Calls in the money it's up $34,911 or 911 shares. You're also looking at 700,000 shares available to borrow. So there you go. So this is updated. This is today. This is actually just right now. Let me refresh. Let's see what it says. If it changed, it didn't change. Obviously, market's closed. But yeah, so there you go. So back to this video, and we'll continue to watch here. Which one was it? This one.
I kind of want to show you an example of unhedging because I saw this come picture perfect to fruition today on Torchlight. Now check this out, right? You look at Torchlight, you saw picture perfect unhedging for the downside once it broke underneath $7.50. Now why would that happen? You look at the open interest on that $7.50 strike, you've got about 8,800 total call options. That's not a huge amount, which is why you didn't get a huge sell-off. But look at this. A break underneath $7.50, while it is a psychological level of resistance, you see an uptick in volume, right? This is unhedging, and it's an example of what you can expect either for the upside or the downside when call options with a lot of open interest run either up in the money or back down to out the money, right? So these are critical things to watch for to kind of have an idea of where critical levels could be for some hard moves if you're playing call options, if you're just looking to buy stock, if you're looking to buy it cheap on flushes, whatever it may be. These are just things you can know, right? Shorts available to borrow 200,000, very low on the day. This used to be a couple million a day, which leads me to believe that either A, there's less lenders that are making stock available, or B, you've got a lot of shorts that are establishing positions. It could be a little bit of both as well, right? And you're seeing the short interest go up for the second consecutive day, which to me states that there's heavy shorting taking place, right? And you can validate that claim by looking at the overall short volume percentage. It has found a consolidation phase between about 38% and 47%, that baseline median being about 44. This is the second consecutive day, yesterday being the day that we're looking at, June 21st, which you had 44% short volume percentage. These guys are a bunch of freaking numbnuts. I don't understand. I'll tell you what, I'm going to start smacking them with my spoon because this is the dumbest short. I just don't get it. Go to shorts. You like a squeeze, I get it. It makes sense to short a short squeeze because you've had a couple small ones, right? This isn't something I would fucking ever try to short, but look at this. I mean, you can look at Clove and say, yeah, this is out of nowhere. No one was talking about it. Short Clove on the way down. I wouldn't do it, right? But to each their own. You can say the same thing about Torchlight. Now, I'm not even saying Torchlight's done, but this would be, I don't know why Webull does this, but this would be an example of a decent short, right? It runs up, it squeezes a little bit, and it runs back down. You can short that. You can take advantage of that falling knife sort of scenario. Where is the smart short here on AMC stock? If you knew nothing about AMC, and you were simply just playing this based on the technical charts, what are you looking at? This is the dumbest short I've ever seen in my entire life. I just would not take that trade. It's not a smart one. And it's happening anyway. So you found that consolidation phase where you've got that 45-ish% sort of short volume percentage that's taking place every single day. We know the shorts are establishing positions. We know there's high frequency trading taking place and likely a lot of dark pool and off exchange trading that's taking place as well. So, man, the story continues on. Absolutely disgusting. Absolutely stupid. I just don't get it. I don't know if I'll understand. And to cap it off, we had a 4.63% green day after what looked like could have been a red day. Now, I want to talk about what happened here today because it was somewhat predictable, right? So I said if you break this ascending level of support, this was the less likely scenario, which actually did come to fruition, right? You're going to be looking at a Fibonacci retracement zone bounce somewhere between $51 and $56. And I gave that range because at $51, bottom is where I thought you'd see the bounce. Now I said exact to a T, like $51.40 or so, $50.84, and it ended up coming down to about $51.07. So that's about as spot on as it gets. If you're able to buy that dip and make a little bit of cash, maybe pick up some call options, whatever you want to do, right? Congratulations, you made some cash, right? These are things that you can actually predict with technical analysis. Following the line, reading the line does not change buy and hold, right? It doesn't change that scheme at all if that's what you're trying to do as the apes. But what it does do is give you the opportunity to make better financial decisions, more responsible financial decisions, and have a plan, right? You don't want to just blindly buy stock when you can actually have a game plan, follow trends, and try and get the best bang for your buck, whether it be call options or actual stock, right? These are real things that you can do to improve your position, right? So with that being said, we ended up testing out this $51 level of support, that Fibonacci retracement zone. What's to follow, right? I put this on Twitter, but I'm going to say it now. I think you're going to be looking at a retest of those high 50s, low 60s, ultimately that $63 level of resistance that has been so elusive to AMC stock for literally the last 2 trading weeks now, right? It's been a tough barrier to break. You can see it tested this 1, 2, 3, almost 4 different times here. Just can't quite get it. And I've said this before, I'll say it again, right? That 4 test trend that you've seen play out on AMC stock many times. It's why it's how I actually predicted you get a break over $14.50 that 4th time that we broke it, right? I think you're about to see that come to fruition. Look at this right now, right? 1, 2, 3 tests right here. Didn't quite get it. Dang close, right? Almost at that $63 level, but you didn't quite get it, right? This is the 4th test coming up. So 2 scenarios, right? What can end up coming to fruition? You retest this $63 level of resistance, and it could get a break, in which case you've got this next kind of zone of resistance, which I think you can see the peak at about $70. I think $70 is going to be a next hard level to break through, and you're going to see a pretty violent move to the upside if and when you get that break over $63, right? If it doesn't break it on the 4th try, what's going to happen, right? Well, let's just zoom out a little bit because I've already got this drawn up from my previous video. I think you're going to see a continuation of bouncing around in this sort of ascending upside level of support, right? You can consider this a false breakdown underneath this ascending level of support. And the reason I say that is because if you look at the daily candles, it's still respecting very well this upside level of support, right? It's still in this huge, massive bull flag sort of setup, which is very bullish, right? This whole setup is bullish. Even though on the day, sometimes it feels like, oh man, we just dropped 3, 4, 5%, 6% in a single, hour, 2 hours, whatever it may be. Grand scheme of things, we're doing just fine, friends. I mean, if you're invested in AMC stock right now, you're holding AMC stock, you are sitting so goddamn beautiful. I mean, this is just really nice. So you'd be looking at a bounce off of $63 if it rejects that level of resistance to ultimately come back down to, if it was tomorrow, $58.50, maybe $59, $60. I mean, it just depends on where you end up going, and you can do this yourself, right? You can connect dots. It's as simple as technical analysis gets. Connect dots to make lines, right? Connect some dots, 1, 2, 3, 4 different dots right here. This upside level of support is still a level of support, even if we're just barely hanging over it right now, right? So those are kind of the 2 scenarios that I've got. I'll mention.
All right, so that's Trey with Trey's Trades. Go ahead and go to his channel and hit the like, follow him, subscribe, hit the bell. Guys, he's got great information, lots of energy, fun guy to watch. So here's another video that I actually found today. This is Mark Cuban, speaks out on market manipulation AMC stock. So we're going to go ahead and play that one for you.
High-frequency traders are front-running smaller investors, in his words. Legal front-running is how he puts it.
Yeah, they are. I mean, there's no question about it. They know that if you go to the store every day to get a Snickers bar, well, if I run to the store first, get a little bit of a discount, and then sell you your Snickers bar, they're going to make a little bit of money, especially if they do it millions of times. And so, it's almost like the SOS bandits, where you take advantage of a regulation that's not quite right. It's what they do, and they've been doing it for a long time, and it's reality. But I don't think that's even the greatest risk of high-frequency trading. That's just part of the deal.
What is the greatest risk then?
The greatest risk is that, A, there's no such thing as bug-free software. All this is software driven. It's actually even going to processor driven with FPGA processors. And because of that, because there's no such thing as bug-free software, when you have fat finger bugs, you just don't know what's going to happen to the market. So there are structural risks, there are trading risks, and I think that plus the fact that when you have algorithms trying to figure out routes and trying to figure out how to get ahead of orders. Look, it's not like there's just one player who's jumping in front of all these orders. You've got all these different algorithmic high-frequency traders who are trying to trick each other and find a better way to get in front of each other. And because we don't know all the algorithms, because we don't know the n factorial, all of the different ways they may interact and the negative consequences that occur as a result, that introduces a market risk. That market risk has an unquantifiable cost. We saw it in one instance with the flash crash. We see it every day with little mini flash crashes. We've seen some, it's gotten a little bit better with the circuit breakers per stock, but we just don't know. And that's even without the possibility of a malicious algorithm being intentionally introduced into the mix. And so there's so many things that can go wrong as all these high frequency traders jockey to get in front of that order. That to me is the biggest problem. And I think as a result, you'll see people not staying with their positions as long because they're not quite sure what's going to happen with the market. When you see something start to go bad in the market, they don't trust the system to say, you know what, somebody will jump in there and pick up the trades. For all they know, the chair might be pulled out and the whole market could fall even further. And then we have such strong correlations between different markets and different types of equities and financial devices that even though there's circuit breakers involved, one trade down, limit down, might lead to something happening in another, might lead to something happening in another equity, might lead to something happening in a full market. And who knows how far that can cascade. All those things introduce risk, and all those things take a lot of money to try to understand and combat.
Wow, guys.
There you go.
Let's break it down simply. Wall Street is a corrupt mess. You have these high-frequency trading computers that can process millions of transactions every second. But beyond that, these computers are competing against each other. To make matters crazier, we have hedge funds that are programming these computers to do unethical things. With the rise of AMC and GameStop, we have been able to uncover so much market manipulation that stems from high-frequency trading.
That's what I'm talking about, market manipulation, AMC. So I was just looking while we're, listening to videos and hanging out. I was just looking and I found some information here on AMC that was put up today. 6/23/21 at 9:53 in the morning. 10 communication service stocks with unusual options alerts in today's session. So let's go back here real quick. We'll go back to that while I go over this. So here it says for AMC, we noticed a call option sweep that happened to be bullish, expiring in 2 days on June 25th, 2021. Well, guys, that's going to be in 2 days. This event was a transfer of 349 contracts at a $70 strike. This particular call needed to be split into 3 different trades to become filled. The total cost received by the writing party or parties was $42,200 with a price of $121 per contract. There were 23,304 open contracts at this strike prior to today, and today 14,182 contracts were bought and sold. Huh? Like, wow, that's crazy. That is so nuts. Guys, once again, it is that time. I'm going to go ahead and hit this. If you guys like this channel, please hit the like, subscribe, and share. Follow me on TikTok at JRockStocks. Follow on Instagram at JarJarLife. Follow on Facebook at BullStocks. That is our group, guys. Come join, come chat, share your profits and your ideas. And then also follow on Twitter at JRockStocks. Obviously here on YouTube, We're going to be posting more and more videos, some analytics of some charts, and also looking at some other factors that go into this fun stuff. But anyways, guys, hope you've enjoyed watching the channel, and like I said, I hope that AMC is going to be looking at 80 bucks this week. We've got 2 days left. I think it's going to do it. So let's see if it does. Remember, guys, I am but an ape. I am not a financial advisor. I can't even tie my own shoes. So this is not financial advice whatsoever. So we'll talk to you next time, guys, and hope you have a great night.